take a look at shares of California utility PG&E, down nearly 16% today, giving back a chunk of yesterday's 75% gain after regulators said the company wasn't responsible for the second most destructive fire ever in that state. Some had questioned PG&E's plan to file bankruptcy before yesterday's findings. So now what? Aditi Roy takes a look.
One day after state investigators cleared PG&E of responsibility for the 2017 Tubbs fire, which claimed 22 lives and more than 5,600 homes, many are wondering what's next for the utility. While some analysts agree the development is good news for PG&E, the utility still appears to be headed towards bankruptcy, saying in a statement, PG&E still faces extensive litigation, significant potential liabilities, and a deteriorating financial situation, which is further impaired by the recent credit agency downgrades to below investment grade.
The problem right now is that PG&E faces something of a liquidity crisis, call it 6-9 months down the road. They just don't have access to cost-effective capital right now with the stock price down and bonds trading at such high yields.
In recent regulatory filings, PG&E estimates its liabilities from wildfires the last 2 years could exceed $30 billion. Analysts say the Tubbs fire ruling takes away up to $17 billion of liability, but that the utility still faces up to another $17 billion in costs from the 2018 Camp Fire, which killed 86 people, setting the current record for deadliest and most destructive wildfire in state history. That doesn't include punitive damages, and some lawyers for fire victims say they're still moving forward with their claims against the utility. Industry watchers say all those factors and the junk status of the utility's bonds makes bankruptcy an inevitable choice.
The problem is there's no way out of this for several years. We look at how slowly California tends to move on just typical regulatory issues, let alone all of the different stakeholders that are involved in this fire liability issue, the potential that you could have future fires that are at risk for PG&E, and it's a process that's going to play out over many years, and PG&E needs financing over those years to support what regulators have said they have to invest in.
But not everyone shares that view. Hedge fund Blue Mountain Capital, a PG&E investor, says a bankruptcy filing by PG&E would be totally unnecessary and bad for all stakeholders because the firm believes the company is solvent and should be able to cover its liabilities. It's calling for a new slate of directors, which the fund will name next month. With the Tubbs fire investigation complete, many are now looking to the Camp Fire inquiry. A ruling on the cause of that fire is expected in the coming months. For Nightly Business Report, I'm Aditi Roy, San Francisco.